Good morning, it's Richard Pears from Finextra TV. This morning, I'm joined by Guillaume Levannier. He's the Head of Sustainable Investment at SCOR Investment Partners and very kindly joined us at our last SustainableFinance.Live workshop. Good morning, how are you again?
Morning, Richard. Fine, thank you. And you?
Yeah, great. I'm glad you were able to join us. Tell us, and the audience, a little bit more, very briefly, who SCOR Investment Partners are and the sort of work you do.
Yeah, in a nutshell, SCOR Investment Partners is the asset manager for SCOR Group, and we manage or advise 16 billion euros in our assets. We are mainly fixed income oriented with high yield funds, corporate loans, ILS also, as well as real assets financing. And 2021 was a turning point for us because we had a new sustainable investment policy. We revamped many funds to fully integrate ESG objectives, and we made nice partnerships with some institutions like SASB or Finance for Tomorrow.
Fantastic. So it was really great to have your perspective along with other folks from the asset management community, along with the data scientists, along with the NGOs in our SustainableFinance.Live workshop. But as I say, looking at supply chain data and how can we access that data and improve decision making, capital allocation in the financial services industry. Tell us, from your perspective, how do you think we can identify the correct and material KPIs to assess the financial value associated with those value chains?
I think we all agree on this point. Extra financial KPIs, ESG metrics, they all have the same objective, which is fine-tuning the real value for each asset and being as close as possible to the most accurate value. And then our questions should be, how can we identify the correct and material KPIs to assess the financial and the extra financial value of invested projects within the value chain? And to answer this question, we have adopted, as many other asset managers, a three-step approach, and I think this was the whole discussion we had. First is that for each company or project, we need to determine its strategies, its peers, its positioning within a value chain. This is key for us, and this is key for every asset manager because it enables us to understand why a company is emitting or not high volume of GHG, for example. And this positioning goes beyond. We try to understand how companies interact with each other and how a virtuous company can positively or negatively sometimes influence its value chain. This was the first step. The second step is to adopt a holistic ESG methodology that can be applied to all our investing companies. For example, at SCOR Investment Partners, we chose to adopt the Sustainability Accounting Standard Board methodology to assess the correct KPIs for each sector. At SCOR Investment Partners, we have 77 sectors, and each sector depends on the nature of its turnovers, the risk it's exposed to, etc. The third step is to select the material KPIs. Is water use or land degradation as important for assessing the sustainability of consulting firms as for an agricultural activity? We believe not. For this step, we really need coalitions and harmonized data and methodologies. This is the third point, and this is maybe the most crucial one.
Interesting. And so the different impacts of each of these KPIs for each investment, how do you actually, what are these different impacts?
Well, depending on the place, on your position within the value chain, you will not have the same impacts. For example, let's take the food and agriculture value chain. We have breakdown it into four steps: a pre-production phase, a production phase, a post-production phase, and a consumption phase. And we can clearly see that, for example, the GHG emissions will have a strong impact on the pre-prod phase, but maybe not on the post-prod phase or the consumption phase. So for each and any sector and each and any place position within the value chain, we look at all the material impacts, all the impacts, all the material impacts, and all the impacts within P&L, balance sheet, cash flows, and else. And every impact has a material and a place where it happens and when sometimes it pops up.
So I guess, when you say it, not necessarily that we've done it in the past, but it makes sense, right? But the investment community is now asking for things from investees that they haven't necessarily delivered before. How does the investment community help the investees to actually deliver, identify, manage, and measure these new metrics that you're asking for?
Well, I think we need to focus on two main things. The first one is the consistency, and this is what we talked at length during the whole panel. It was very interesting. And the second one is the aggregation of data. Why the consistency? First thing is that we see that all the data providers, which are very, very good, this is not a criticism or else, but have low correlation between them. I mean, you're taking some data, well, some final KPI in one data provider, and you're taking another one, and you have a correlation of, I don't know, let's say 0.3 or something, or 0.5. This is very low. So we need to have better consistency. And the second one is we need to be able to aggregate all the data. I mean, can we aggregate the data of one bottle producer and one agricultural product producer? I mean, we can't. So consistency and aggregations are the two main things we need to focus on. And for that, our position and our talk during the whole discussion was also to have access to the most granular data. Because, okay, in the end, the KPIs can be different because they have been aggregated and else. But when you go to the most granular data, you have the highest correlations. And we do think that raw data does not lie. I mean, this is where we need to focus on.
Yeah, and so I think that was a large part of the conversation, as you said. What did you find useful about the format of SustainableFinance.Live? Which for people that didn't listen to it is a multidisciplinary workshop over something like 8 hours, broken down into 3 sections where we look at the investor, the investee, and the solution provider perspective. But for you, what was useful about taking part and spending your valuable time in this exercise?
Well, what I loved was that it was a real bridge between asset managers and data providers. I mean, well, and investees, asset managers, investees, and data providers. I mean, consistency, aggregation of data, having a value chain. The 3 actors that we need to have around the table are the asset managers, the data provider, and the investees. And for this, I did think it was very useful, and it was useful because having these 3 people around the table makes it easy to have better engagement and better vision, common vision together. I mean, we do a lot of engagement and corporate dialogue with our investees at SCOR Investment Partners, for example, and we always need the data provider with us within our coalition to be aware of which data can be provided and on which KPIs the investee can report on. So this was the most useful and the main takeaway of this table, I think.
Fantastic. Well, I mean, all the videos are available for people to review, and we'll also be producing the visual record so that people can pick into the mind maps that we built through the course of the workshops. So listen, we really appreciate your insight because, as you said, without the investment community putting their time in to give their perspective, the data providers don't build the right products, and the NGOs perhaps are not getting what they need. So it's really appreciated, and also you spending your time before Christmas to give us this update. So for now, thank you so much, and look forward to working with you in 2022.
Thank you, Richard.